Welcome to the second part of Chapter 11. In the first part, we discussed the importance of selecting the right candidate as an expatriate. When multinationals fail to select the right person for the job, this can become a major expense. If an expatriate costs upwards of $500,000 a year and this individual fails, then the company needs to turn around, train, prepare, and send someone else to fill that position. These costs can add up. It's important to recognize that a high performer in the domestic context does not guarantee equally high performance in the foreign location. Some important success factors to consider when selecting individuals for expatriate assignments include technical and managerial skills. Does the individual have the relevant know-how to fulfill the requirements of the position? Personality traits. What is the individual's personality? Does this individual rank highly on openness to experience? Is this a flexible person, a person who is willing to learn and adapt to a new situation? What is this individual's relational abilities? His or her ability to adapt to other cultures. This is also referred to as cultural intelligence. Cultural intelligence is the individual's ability to gauge and understand verbal and nonverbal cues from a variety of cultures and adjust his or her behavior accordingly. People who speak multiple languages, have extensive international experience, those are the individuals who are likely to have higher levels of cultural intelligence. Another question the multinational should ask itself is, what is the individual's family situation? Of course, you do not want to exclude people because they are married or have children, but you have to consider the individual's ability to succeed given their family situation. Are they part of a dual career couple? Is the family willing to travel? And so on. Stress tolerance is another important consideration. Taking on an international assignment and adjusting to a new environment can be stressful. Does the individual have language ability? Can he or she speak, read, and write the host country language? And does the person have high emotional intelligence? His or her ability to empathize and relate to others, correctly read and respond appropriately to other people's emotions. Of course, these considerations are going to differ based on different types of assignments. If the assignment is relatively short, there's going to be more emphasis on technical and professional skills and less emphasis on interpersonal and cross-cultural skills. If the assignment is to a country that is very culturally similar, a country that has a small cultural distance, again, there is less need to emphasize cultural intelligence. For example, an American expatriate relocating to Canada would not need to have extensive cultural intelligence given the similarity between the countries. But an expatriate going to a culturally distant context, for example, China or Russia or India, would have to have higher levels of stress tolerance, flexibility, and cultural intelligence. The third and final consideration is the degree to which the individual is required to interact and communicate with host country nationals. If individuals' jobs are more externally focused and require heavy emphasis on interaction with host country nationals, there would be great benefit to having high levels of emotional intelligence, cross-cultural intelligence, as well as language ability. But these are less important if the job is internally focused and all communications will occur with organizational members, insiders who speak the corporate language. So in selecting expatriates, we have to think about the nature of the position and where it's located. Is the location culturally distant? Is the assignment long-term? And is there a requirement for high interaction with host country nationals, meaning the job is externally focused? In those types of situations, we would likely emphasize personality, relational abilities, stress tolerance, language ability, emotional intelligence, and cross-cultural intelligence a lot more than when selecting individuals for short-term assignments in a culturally similar destination with predominantly internal interactions. Most expatriates will be internal hires, meaning current employees, parent country nationals who are transferred to the foreign location, and therefore the training is less likely to focus on job skills and organizational knowledge and more likely to focus on developing cross-cultural intelligence. If a multinational is going to hire external individuals, such as those self-initiated expatriates we discussed in the first part of Chapter 11, then the training might emphasize organizational knowledge, such as onboarding and understanding the organizational culture, a lot more than with internal hires. Of course, training can vary significantly in terms of rigor. Organizations will determine the level of rigor much using similar variables in terms of those variables considered for the selection of expatriates. For example, training rigor is going to depend on how long the assignment is, how culturally distant the destination is, and whether or not the job is internally or externally oriented. For individuals going on short assignments to relatively similar cultures for a job that internally oriented, lower rigor would be sufficient. Low rigor would be appropriate for short assignments to a similar culture with low to moderate job responsibilities and low need to communicate with host country nationals. This type of training would consist of lectures, videos on the local culture, maybe some company briefs. When expatriates take on assignments that are long-term, 3 to 5 years, to a culture that's highly different, cultural distance is significant, with important job responsibilities and a high external focus, need to communicate with host country nationals, a more rigorous approach is going to be beneficial. Highly rigorous training is going to last a lot longer, is going to involve some experiential learning, extensive language training versus just survival language skills for low and moderate training rigor, and include interactions with host country nationals, and maybe even a preliminary visit to the host country. So the rigor of the training and the importance of the training is going to vary based on the nature of the assignment. As mentioned in part 1 of Chapter 11, performance management is another important responsibility for the Human Resource Management Department. Performance management should ensure that the expatriate is performing and meeting the objectives set forth for the assignment. But performance management in a different cultural context can sometimes be very challenging because performance criteria don't always translate well across locations. This is due to cultural differences or operating in a different legal and economic context. Some of the unique challenges of managing the performance of expatriate managers lies in these 4 issues. First, the concern regarding fit of the international operation in the multinational strategy overall. For example, sometimes multinationals enter a new market and have no objectives or low objectives for short-term profit and can operate in the red, so to speak. And so this might not necessarily mean that the expatriate is underperforming, but that this was the expectation of the multinational as it was entering a new market with an unfamiliar landscape or unfamiliar competition. Another challenge is due to unreliable data from the local subunit. Data from subsidiaries in foreign countries is not always comparable. This might be due to differences in accounting laws or the ability to use part-time employees, or the number of hours employees can work in 1 week. For example, in France, the law mandates a 35-hour work week. This does not mean that a manager is inefficient in managing his employees if he or she needs more employees to complete a particular task if those employees work fewer hours in one country versus another. Another challenge is due to the complex and volatile environments. There are potentially rapid and unexpected changes and challenges that could impact financial performance in foreign locations, like natural disasters or political unrest or other type of strife. And finally, the differences in time and separation, which means there's limited interactions on the day-to-day basis between the expatriate manager and headquarters, which makes evaluations more challenging. In order to provide effective performance management and appropriate evaluations, multinationals have to make sure that the evaluation criteria meet the strategy. If the goals are long-term, we should not use short-term performance measures. Evaluation criteria need to be fine-tuned to make sure that they match the local context, for example, local labor law. And we should use as many sources of evaluation as possible with varying periods of evaluation. Different types of evaluation can be self-evaluation, evaluation by subordinates or peers, maybe even customers or an on-site supervisor. Of course, it's important to remember that not all types of evaluations are culturally appropriate. In high power distance societies, employees are not going to feel comfortable evaluating their managers. And so a 360-degree feedback system, which is a system of performance management in which the individual receives feedback from individuals from 360 degrees, meaning their subordinates, their superiors, their peers, and sometimes even external members of the organization like customers. This approach can be very effective in low power distance societies, but in high power distance societies, subordinates are not going to feel comfortable to evaluate their manager. As mentioned earlier, compensation is a tool that organizations use to attract, retain, and motivate individuals. In constructing equitable, fair, and competitive compensation packages, multinationals need to be able to balance cost effectiveness with creating packages that are sufficiently attractive to attract, retain, and motivate the individuals that the company needs. We discussed earlier some of the reasons for having significantly larger compensation packages for expatriate employees. Some of the additional allowances added to compensation packages make these compensation packages quite expensive. The goal is to ensure that the expatriate has purchasing power parity, meaning that the expatriate can have the same standard of living in the foreign country as they do at home. Cost of living allowances might be necessary even in very low cost of living societies. For example, some African countries have very low cost of living for host country nationals. But for foreign nationals, for parent country nationals to have a standard of living that's comparable to what they're used at home is going to be quite expensive. And so even in low cost countries, multinationals sometimes need to add a cost of living allowance, COLA for short. Other allowances added to the compensation package are a hardship allowance to make up for hardship differentials across countries. If you're curious to learn more about hardship allowances, you can check out the link on your As You Learn page from the U.S. Department of State, which identifies hardship allowance in different countries around the world as a percentage of base pay. Other allowances might include a housing allowance. The company might have company-owned accommodations that it makes available to expatriates, or it might cover any costs of housing that exceeds the percentage of the individual's pay in the home country. If in your home country your housing is 30% of your take-home pay, if it exceeds 30% in the host country, the company might make up that difference. Other allowances include relocation allowance to relocate personal belongings to the host country. Sometimes companies might also offer a home leave allowance, which allows the individuals to go back home once a year. This also makes it easier to repatriate individuals at the end of their assignment because they have not completely disconnected from their home country and the home office if they continue to have annual visits back home. An education allowance is offered sometimes for dependent children if the expatriate wishes to enroll them in an English language school or an international school, which is often a private school and has tuition similar to what a college tuition might be. Sometimes education allowance could be extended to the trailing spouse if the trailing spouse has to give up his or her job to facilitate the expatriate assignment. Other aspects of compensation includes protection from dual taxation. American citizens are taxed for their global income. And so at times, individuals might find themselves paying taxes in the host country and also having to pay taxes in the home country, which results in dual taxation. Multinationals will typically hire the services of an international law firm to facilitate protection from dual taxation for expatriates. The expatriate would pay the taxes he or she would owe in the home country, the same percent that he or she would pay if they stayed at home, and the company pays anything that goes beyond that. Finally, benefits are another important component of the compensation package. Expatriates are going to want to continue being able to save for retirement. Pre-tax deductions are not legal in every country, and so the company would have to find solutions to allow for expatriates to continue saving towards retirement and making contributions towards social security plans in their home countries. Health insurance has to be provided to protect the expatriate's well-being as well as the well-being of the family, and the quality of the care should be comparable to what the expatriate is used to in his or her home country. The most common approach used by multinationals in figuring out international compensation is the balance sheet approach. The balance sheet approach roots base pay in the home country. Base pay is rooted in what the expatriate would make in his or her home country. This makes this approach easy to understand for the expatriate, and there's no difference in base pay regardless of the destination in which the expatriate finds him or herself working. This base pay is then supplemented with different allowances to make sure that the expatriate has purchasing power parity, is able to have the same purchasing power and have the same standard of living that he or she had in the home country. Allowances include all of the allowances that we identified in the previous slides: adjustments for differences in taxes, protection from dual taxation, adjustment for cost of living differentials, accommodations for cost of housing, sometimes recreation is also covered, education for trailing spouse or dependent children, and medical care. In addition to matching purchasing power in the base pay and the allowances, multinationals very often offer foreign service premiums or inducements. These are like bonuses, sign-on bonuses, to encourage individuals to take on foreign assignments. It might include a hardship allowance. We looked at the list previously, depending on the hardship of the destination. Relocation allowances to cover the relocation of flights plus moving personal belongings, and home leave allowance, as I mentioned earlier, going back to visit the home office regularly. While this approach is easy for the expatriate to understand and does not create differences between different types of assignments, you will have the same type of compensation regardless of the country in which you are going to find yourself in. This approach is quite complex to administer because cost of living varies all the time, and this can create a significant disparity between parent country nationals and host country nationals who do not have all of these allowances and end up making a lot less. And this can create some significant inequities within the organization and reduce the motivation and commitment of host country nationals working for you in the host country. The balance sheet approach is closely aligned with the headquarters-based compensation, but we have other approaches to compensation which are becoming more popular given the high costs of headquarters-based compensation packages and the inequity that it creates with host country nationals and third country nationals. One such approach is the host-based compensation. It's also called the going rate approach. This means that the expatriate compensation package is based in the host country, and the expatriate's base pay is comparable to what host country nationals in similar positions would be making. And so it helps the expatriate to adjust to the wages and the local lifestyle of the host country. This is a more equitable approach in terms of having a similar standard of living across different organizational employees, regardless of whether they are parent, host, or third country nationals. And it's easier to administer because you don't have to engage in constant cost of living allowance. But because the pay is rooted in the host country, it can create a situation in which some destinations, high-pay destinations like the US, are more desirable compared to low-pay destinations, in which employees might feel that their standard of living would drop and they will not have purchasing power parity. Other approaches are the global pay system, in which there is no standard pay in terms of aligning pay with the home country or the host country, but rather there is one worldwide standard, plus necessary adjustments to make sure that there is purchasing power parity. Other organizations offer a lump sum payment, which is like a sign-on bonus, which is determined based on home country pay to be applied as the expatriate sees fit. Sometimes this is paid in a lump sum, sometimes this is paid over a number of years. Other options include a cafeteria plan, which is similar to the lump sum, but the expatriate can select what types of allowances he or she can pick from. When thinking about expatriate compensation, it's important to recognize that these packages have to be attractive enough to encourage people to take on expatriate assignments, especially in areas that are critical to the multinationals and to the multinational success. The compensation packages have to be effective and efficient in terms of implementation. They have to offer some type of stability in terms of lifestyle and economic status. Nobody's going to want to take on a position that represents financial hardship. But it also has to treat employees fairly and consistently regardless of national origin. The compensation strategy should be consistent with the overall strategy of the multinational. And the multinational needs to identify systems that are easy to administer and cost effective. Of course, compensation also has to bear in mind the desire to repatriate the expatriate once the assignment is complete. If the expatriate is making significantly more in the host country, he or she might be reluctant to return home. We'll discuss repatriation in the third and final part of Chapter 11.